Should investors also be optimistic about this recovery that we seem to be in? With us now, Darryl Cronk, Chief Investment Officer for Wealth and Investment Management at Wells Fargo. Bryce Doty is Senior Portfolio Manager at SIT Investment Associates. And Ann Elizabeth Conkle is an economist at the Indeed Hiring Lab. Bryce, let me begin with you. I guess the fact that the unemployment claims numbers dipped below 1 million is cause for some happiness, but it's still 900,000 plus. And the old rule of thumb was that anything above 400,000 in a week was bad news, signs of a recession. This is double that.
Right. It's certainly a sign of the times when you're actually excited about only 900,000 people filing for unemployment. It's, it's still a huge number. I like the trend, but it's very worrisome when you think that there may not be an extension of unemployment benefits with how many people are still unemployed. And yet, we find that we are optimistic on bonds and a lot of the stock market. So it's a really strange message. You sound crazy when you tell clients that we're really concerned about the economic fallout with claims continuing to be so high and so many people unemployed, while simultaneously the Fed is really supporting corporate bonds. And at some point between now and year end, you're gonna get this darkest before the dawn type of moment where there might be another wave as schools reopen just before vaccines start coming online, and that's going to create quite a huge rotation, I think, in the stock market. So there's still some upside there as well. But you sound a little crazy though when you're telling clients the mixed message about the economy versus the financial markets.
Ann Elizabeth, why don't you react to what Bryce just said? But also, I'd like to ask you about how concerned you are that there may be another wave of unemployment coming sometime this fall, as perhaps restaurants that have opened, small businesses that have opened, either retreat, fold up, or are faced with another wave of virus?
Yeah, so it is a good sign that the numbers are falling. A particular bright spot is that for the non-seasonally adjusted claims, this is the fourth week in a row of this downward trend. But again, as has been said up to this point, the numbers are still extremely high. So it is really just another sign that there is recovery, but there is a very long road ahead. The impact on the entire economy, as well as the possibility of, a second wave, is right now there are more reports of people struggling to pay their bills, purchase medicine, and so the absence of this additional money is a tremendous negative impact on their overall economic well-being. And it is going to have a very negative impact on consumer spending.